Welcome to today's video. I hope you're doing very well. In today's video, we are going to cover one of the most important confluences in day trading. This confluence right here has allowed me to increase my win rate significantly. And trust me, it is not that difficult. Everybody talks about it, everybody knows about it, but most people struggle with this confluence with regards to how to find it and then how to apply it. But that is what this video is for. I'm about to show you how to master the art of the SMT divergence. So get ready to lock in because I'm about to break it down and then we're going to go over to some charts and I'm going to show you how to use it with some real live chart examples. So get ready and let's get right into it. The first question is, Seb, what is an SMT divergence? Like, what even is that about? And it's as simple as this, right? An SMT divergence is when we have two assets and there is a decorrelation between both of these assets. Now, I trade the Nasdaq and the S&P 500. So what does that mean? Well, that means that an SMT divergence is when there is a decorrelation, or as we call it, a divergence between the Nasdaq and the S&P. And we're about to get into some examples. As you can see on the screen right here, we have a clean example of a bullish SMT. Now, do you notice any difference between the Nasdaq and the S&P 500, right? This is the chart on the left and this is the chart on the right. Anything weird going on? Well, if you notice that, yep, we have a low and a higher low here and a low and a lower low here, then you would be correct because that is an SMT. An SMT is simply when on one index, so in this case, the Nasdaq, you can see we have a low and a higher low. And then on the other index, which in this case is the S&P 500, we have a low. And instead of forming a higher low like we did on the Nasdaq, we instead form a lower low. That right there is a prime SMT. Now, what is an SMT an indication of? An SMT is simply an indication of a reversal. It's a confluence that signals to me, Seb, look, we're probably going to get a reversal from this area. Is it 100% guaranteed? No. But does it give me additional probability to believe that, well, we're probably going to get a reversal and start targeting all these draws on liquidity on the left-hand side? Yes, it does show me that. So that is why I love SMTs, because it gives me that additional probability, that additional confidence going into looking for a reversal. Does that make sense? Now, do we just take trades purely based off an SMT? Do I see an SMT and click buy if it's a bullish SMT, or sell if it's a bearish SMT? The answer is no. We don't take trades purely based off SMTs. SMTs give us an indication of when we're going to get a reversal. Now, once we get the idea that we're going to get a reversal, that's then when we drop down to the lower time frames and execute using our model. In my case, that is the Expo model, which is my personal trading entry model for reversals. And that is exactly what I'd be looking for, right? Once I've seen this SMT, once I've seen this, divergence or decorrelation, I'm thinking, right, reversals are on the table. We zoom into the lower time frames. I'm looking for the Expo model. Oh, there's the Expo model. Bang, buys, and we catch this whole entire move. Does that make sense? And it's the same thing for buys or sells. Sells are just the opposite way around, right? But yeah, pretty much the main basis of this, or what I want you to remember, is that Nasdaq low, higher low, S&P low, lower low. And this could be the other way around. This could be the S&P, this could be the Nasdaq. But the whole point of an SMT is that there is that decorrelation. Does that make sense? Now, one last thing quickly before we head over to the charts and I show you how to catch a banging trade using SMTs, which of these indices is going to be the trailing index and which is going to be the leading index, right? I'm going to give you 2 seconds. Pick one, pick one. If you said that the Nasdaq would be the leading index and the S&P would be the trading index, then you would be correct. And I'm about to explain why really quickly. Well, in this case, right, we can see that the Nasdaq has failed to sweep out this low, right? It's failed to sweep out this low, and then we've started off this reversal. Whereas on the S&P 500, we've confirmed that we have swept out this low. So what does that mean? That means that the Nasdaq is leading with regards to the reversal, right? It is dragging the S&P 500 behind it. That is the way that I want you to think of this, right? The Nasdaq couldn't, it did not have enough bearish pressure to sweep out this low, right? So then what did it do? It started dragging higher and it started pulling the S&P 500 behind it. And that is why we usually look for trades on the leading index, because it's going to head to all the targets, meaning your draws on liquidity faster. Yeah? Does that make sense? Leading index, trailing index. We want to take a trade on the Nasdaq. the leading index if we want buys, right? Anyways, let's get over to some chart examples. And this is really, really going to glue everything in your head. So get ready to lock in. All right, so I want you to have a look at this chart right here. And do we notice anything in general, right? What do we notice about the general trend, right? Well, we're clearly in an uptrend, right? We can see that the market is printing higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. And this is just genuinely an uptrend. We see the market's moving higher. But what can we see about recent price action? And by the way, I want you to remember this. This is on the daily time frame. And this right here is on the S&P 500. We're going to have a look at the NASDAQ in a second. But what can we see? Right? Well, we can see that we're forming these higher highs and higher lows. We're clearly in this uptrend. And then we get this big sell-off, right? We get this big, big, big sell-off. And this is completely lateral. This is what the market has to do. Are we just going to keep printing higher forever? No. We need to rebalance. We need to take out some liquidity. We need to fill in some imbalances, as you can see that we have done with this move down. We've come down and we've swept out some draws on liquidity. We've taken out this low right here, gathered that liquidity, taken out some more of these lows that are on the lower time frames across this movement up. That is more liquidity. We can see that we've swept out this daily low right here, right? And we can also see that we've gotten this big rejection from that. We've swept it out and we've rejected. So that right there is giving me some indications, or it's giving me some signs that, okay, cool, we're probably going to want to reverse now. Does that make sense? Let's have a look at the NASDAQ. What's the NASDAQ telling us? Well, now the NASDAQ is telling us a similar story, but here's where I want you to keep your eyes out for an SMT. We can see that we're clearly, same thing, we're clearly in an uptrend. We had this massive sell-off. We took out some liquidity. We filled in some imbalances. Did we sweep out this low? The answer is no. We didn't sweep out this low, right? You can see that the market tried to. It reversed, but it never swept out this low. It never swept out that low. Why is that the case? Well, if you remember from what I just went through a few minutes ago, this is an SMT. The S&P 500 swept out this low. The NASDAQ, however, didn't. That means that we now have a decorrelation between both of these assets, right? Low, higher low, quickly over to the S&P 500. We can see low, lower low. Makes sense? The S&P has swept out this drawn liquidity for the Nasdaq, and this is on the higher time frames, right? If you can identify a higher time frame SMT, that's even better than identifying a lower time frame SMT, because at the end of the day, guys, remember, higher time frames hold higher power. So this gives me a very strong indication that, okay, cool, now that we've gotten this clear bullish rejection from here, we're probably looking to target the, the swing high of the move. This is our ultimate target. We retraced, got an SMT, got a bullish one. We got a clear rejection from it. Probably seems like we're going to try and target these highs again. Now, if we're looking for buys, right? I'm not saying we're looking for buys just yet, but if we were to look for buys, what would we look for them on? The NASDAQ or the S&P 500? I'm going to give you 2 seconds to remember. Well, we want to take it on the leading index. And in this case, the NASDAQ is the leading index. The NASDAQ is the index that is dragging up the S&P 500. So right here, we have a bullish SMT, meaning I am probably going to want to look for buys now. Now let's drop down to the lower time frames and see if we can identify anything. Well, 4 hours looking very, very interesting, right? We can see that we've come higher, but we've actually just tapped into this huge bearish imbalance, right? We have this massive 4 hour bearish fair value gap, from here to here. And we can see that the market has tapped into it. And since tapping into it, it has given us, some weakness. These aren't really decisive candles. It's a bit shaky. So who knows what's going to happen? But what else can we see? We can see that we've retested into this 4 hour bullish gap, and we're getting this big rejection. So that right there is safe to say it's a pretty bullish sign, right? We've retested this bullish fair value gap and we're rejecting with this massive wick. That is bullish to me. Is it the same thing on the S&P? Pretty much. We can see that we've retested this 4 hour gap and we've gotten this big wick rejection. So that just tells me that, okay, there is a strong case for buys. There is a possibility that we want to look for buys. So now let's drop down to the hourly time frame. Do we notice anything? Pretty similar. I mean, pretty similar. Nothing too different. We can see that, We've tapped into this higher, this 1 hour bearish fair value gap. We're sort of chopping around. We did come down and tap into this 1 hour bullish one. Very, 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 very small fair value gap, but nevertheless, it's still got respected. And you can see that now we're getting this rejection from it. So buys are definitely still on the table. Let's drop down to the 5 minute time frame. And now let's see if we can catch any bangers. Let's see if we can catch any nice trades. Now, guys, I want you to keep an eye out here. I want you to keep an eye out to see if we form any SMTs on the lower time frame. We know that we have on the higher time frame. We know that we have a bullish daily SMT, but can we find one on the lower time frames, right? So because we want to look for buys, I'm going to apply my model. I'm going to wait for a 5 minute sweep of liquidity. So I'm going to mark out these 5 minute lows, 5 minute lows, and we have these relatively equal 5 minute lows right here. If we head over to the S&P 500, is it going to be the same thing? Yep, let's just mark out those same equal 5 minute lows. We have 5 minute lows here. We have 5 minute lows here. We have some 5 minute lows here. Market opens in literally 10 minutes. Market opens at 2:30. So we're going to skip a few candles. 1, 2, and we're going to see what happens now. Can we sweep out any of these lows? Okay, seems like we've now swept out this 5 minute low in the S&P. Let's quickly check over to the Nasdaq. Have we swept that out? Iom, Nasdaq has come down. So we can see that the Nasdaq has swept out these relatively equal lows. So that right there means we have a liquidity sweep. But guys, the S&P 500 hasn't. These lows are still unswept. We could potentially have an SMT here. Let's see what happens if we keep skipping candles. But we can see that now we're starting to get a rejection from here. So what I'm going to do is I'm going to mark out with my trend line our bullish SMT, right? Because we have a low and we have a higher low. Whereas if we head over to the NASDAQ, you can see we have a low and we have a lower low. Interesting. Do we see what's happening right here, guys? And this is right after market open. This is right after 2:30. We have a bullish SMT. I want to look for buys. So this is making a lot of sense. Now, because I'm looking for buys, I'm just simply going to wait for my model to form. And it seems like it has. I want to wait for a 3 minute inversion. So we can see that we are literally inversing this 3 minute gap right now. We're going to skip to the next candle to see what happens. Yep, we got this clean ass inversion. Now, this inversion right here signals to me that, okay, we are now flipping from bearish to bullish. Amazing. Now let's drop down to the 1 minute time frame and let's see if we can get a retest and rejection. Well, I can see that we've already gotten a retest and rejection. We've gotten a very clean retest and rejection, in fact. We can see that we have come higher, we've now come down, retested this 1 minute bullish fair value gap, and we've gotten this lovely rejection candle right here. Wow. Perfect sign for buys. Not only just that, we have also pulled into equilibrium of the range. If I get my GAN box out and I mark it from this low to this high, yes, I know this looks like an absolute mess right now, but where is the 0.5 region? The 0.5 region is right here. We see that the market comes down, taps into this 0.5 region, which is the discount zone. We then get this rejection candle, bang. That is my exact area of execution. So that is where I would look for buys if I was following my exact entry model. Now, where am I going to look to target? Now, the question here is, right, do you think we're going to go all the way up to these highs up here? Or do you think we just want to be safe and target these highs up here? Good question. Well, this is definitely one of my draws on liquidity. And this is potentially my next draw on liquidity, right? So what are we going to do? Well, we're just going to see, well, let's target up here. Let's move this out wider. Let's go down to the 1 minute time frame. Probably going to set my stop loss just underneath here, just for some safety. And let's wait and see what happens with this trade. If we wanted to be safe, we would target right here. In fact, I probably am just going to target right here. You have the opportunity to take partials here and then target this as the final take profit. But just for the sake of this example, we're going to target this high here for a 2.26 risk to reward ratio. So let's wait and see what happens. Skip, skip. Okay, we just got a retest and a rejection of this 1 minute gap. Can we now target this high? Can we now push to this high? Bang. Yeah. That right there, as you can see, super clean trade. Let's see if we go on to hit the second take profit. Ah, well, we don't. So that means this was a very, very good target. So yeah, guys, as you can see, prime example of how to use an SMT and how to actually use an entry model to look for buys, right? And you can see this was a super clean movement. We had a lower time frame SMT. We had a higher time frame SMT. Now, one thing that you're probably thinking, Seb, why did you take the trade on the Nasdaq and not on the S&P 500? Right, the S&P 500 is the leading index. It got we had the low and then the higher low. Why didn't you take it on here? Well, the simple answer is, guys, what holds more power? The daily or the 5 minute? Well, a daily SMT is going to hold more power than a lower time frame SMT. Therefore, the Nasdaq was the leading index on the daily time frame, and therefore I took the trade on the Nasdaq. Makes sense, and that is how we managed to hit a nice 2.26 risk to reward. And I know this isn't the craziest trade in the world. This is not like, oh my god, Seb, that trade is ridiculous, but it's just used as an example to show you what SMTs can do, how SMTs actually form in live conditions, right? We can see market opens, bang, we drop on the Nasdaq, but we don't drop as much on the S&P. Does that mean we just kind of sit there and like, oh, why is one dropping more than the other? No, we take action. That's an SMT. That's a reversal indication. Can we form my entry model? Yes, we can. Retest, projection, entry, bang, target those highs. Super clean, direct, swift movement. And that right there is a winning day. That is a winning day using one of the easiest confluences. I say it's easy, it's not that easy. I remember when I was first learning, it was a bit hard, but that is an easy confluence once you master it, right? And hopefully, this video gives you a good idea of how to master it. I showed you an example of a bullish SMT, and then I actually went onto the charts and showed you a live example of a bullish SMT. And as you can see, that is how we used it to catch this beautiful reversal entry, right? We caught this beautiful reversal trade. Yeah, this trade, lovely win. SMTs allowed us to take this. So, guys, hopefully this made sense. Hopefully, your understanding of SMTs are now way stronger. Any doubts or anything that you were uncertain of before is now covered. Ultimately, it's just a decorrelation, right? It's just a decorrelation. And because I trade the Nasdaq and the S&P, those are the two indexes that I use to determine whether we have a decorrelation or not. Make sense? Anyways, I used it today. I just showed you an example of how to use it. And if you have any questions, guys, just let me know in the comment section below and I'll be happy to answer anything for you. Guys, just want to leave it off there. I want to say, remember to subscribe to the channel if you're not yet subscribed. Ask me any questions in the comment section and leave a like on the video if it's actually helped you out with your trading, with your understanding of SMTs. But I wish you guys the best and I will catch you in the next video. Peace.